What's up, you guys? Welcome back to another video. And in today's video, I want to give you guys an update on the markets and what you can expect going forward there as well. We are going to take a look at the dollar index, gold, Nasdaq, US 30, the S&P 500, as well as GBP and USD from a technical and fundamental perspective. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the content, please smash the thumbs up for the YouTube algorithm there as well. Now, my good friends, we are going to just quickly dive into what we got this week so far. We have the PMI Purchasing Manager Index that came through higher than forecasted at 15.2. Anything above 50% is good. We had the job openings came through higher than anticipated, also higher than the previous month, which was also good. Tomorrow we do have the ADP. We got the FOMC, the Federal Funds Rate, which is the interest rate decision, and I'm expecting all of this to be positive. And then this, I'm not so sure about that, but we can speak about that obviously once we get there, once we saw the ADP. But from where we are now, the bullish momentum in the dollar index is going to continue as anticipated based on my last breakdown that I've explained to you guys. And we can expect the dollar now to continue that move to the upside. Stock market has had their time, but it's now for the time for the markets to finally open. And what better way to open it with a nice 0.75 basis interest rate hike this season. Starting with the article from CNBC, it says here, Dow gives up early gains and slides Tuesday as November trading kicks off. Basically what that means is that we've in the week where high impact news is now starting to unveil itself, and all of this news is directly negatively correlated with the stock market or the indices there as well. It says here the Fed needs to cause pain to break inflation, says this guy Brady. Now what he basically means is that cause pain, people's going to lose their jobs, interest rate is going to be hiked more aggressively. The markets are anticipating a 0.75. We could potentially see a full basis point there as well. Says here stocks rose on Tuesday as a new month of trading commenced, and Wall Street looked ahead to a key federal decision on rates. The Dow Jones Industrial Average traded 76 points lower, or 0.23%. The S&P 500 and the Nasdaq was down 0.2 and 0.3% respectively there as well. It says here the better than feared earnings session also continued Tuesday with a strong report from this company who makes vaccines, while Uber said popped on a revenue beat there as well. Now, this is all good and well. It says here Tuesday also marks the start of the Fed's November meeting, which means many will expect a 75 basis point interest rate hike, whether you like it or not. Investors will also monitor the central bank statement and Fed Chair Jerome Powell's press conference for signs of slowing, tightening pace. Well, good luck with that, my good friends. Starting with the dollar index, I'm just going to jump straight into the daily time frame. So the dollar index, obviously, when I spoke about this market, it was sitting at this level. I explained all of the reasons for why we can't see the market complete this information. After the information, you expect a pullback to the neckline. From here, I would have liked to see this move to the downside, and I'll obviously get a pop-up to come up here somewhere. If you want to re-watch this analysis, it's probably going to come up here somewhere, and you can watch this analysis where I anticipate the market move to the upside, expecting that pullback to the downside. However, because we're expecting the dollar to continue the bullish momentum, I do expect the dollar to continue higher. Now, what do we have over here? We've got a market that's currently trading in bearish territory, right? We've got a market that traded below support, came back to test it as resistance. By definition, we expect the market to pull back, but purely based on fundamental data, we definitely expect the dollar index to continue higher. Another best way to approach this is always to wait for a clear break above this strong level of support that is now acting as resistance, and once resistance gets broken, then be acting as a level of support, and then from there we can definitely expect that continuation to the upside there once again. Next up, we've got gold over here, Also completed an information. After an information, you expect a pullback to the neckline before that continuation due to the negative correlation between the dollar index and gold, because we expect the dollar index to increase in value due to the fact that the Feds are going to hike interest rates, and higher interest rates it's more likely to interest investors, and that basically dominates or give the dollar index the power that it requires. We can even expect the dollar index to continue higher and gold to continue lower. Gold also broke below support, back to test it as a resistance. Gold printed a massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low, and you can see how gold pulled back and tested and rejected the 61.8 Fibonacci level there as well. Next up, we do have the Nasdaq 100, and this is still the breakdown that I did there. The Nasdaq 100 is still due for a continuation to the downside. What better way is there for the Feds to come through and make this move possible even faster? Now, it's very important to understand that we do have a key level that we will be faced with over here. I would say that the best way to approach this is obviously wait for the market to break above this level of resistance that acted as support. Support will then be broken, but at the moment this was the resistance. The market broke above that, tested as support, broke below support, came back, broke above resistance, and it's now back to test that level as support. We need to wait for a clear break below this level of support, and once that happens, support would then be turned resistance, and on the retest we can have to start looking for that continuation to the downside for the market to continue lower. Next up, we do have the Dow Jones. Now, the Dow Jones was trading at a good structural level over here. Now we can see this level acted as a level of support. The market only came back to test it as resistance for the first time. The last structural level that was created on the US30 is sitting at this level. So yeah, you guessed it, the market's going to take a massive dump, but it is also very important to note that we have this strong level of we do have the strong level of resistance that the market had printed there, broken above resistance. That the resistance is now acting as a level of support. Best way to approach this is wait for the market to break below that level of support. That would then be turned resistance, and on the retest we could definitely expect that continuation to the downside. Next up, the S&P 500. There's that last analysis that I did. The S&P 500 is now approaching a level of support, and this level over here acted as a strong level of resistance. The market broke above that and is back to test it as support. Now, the best way to approach this, if you haven't guessed it by now, is to wait for the market to break below this level of support, and then on the retest, and then start looking for that continuation to the downside. In doing so, with the market then also print this head and shoulders pattern, which is considered a bearish pattern from a technical perspective. Next up, we do have GBP USD. GBP USD is just about to break below this strong level. We have two structural levels that the market had broken below. This level over here acted as a level of resistance. Market broke above that, came to test it as support. Support almost held. And we can see how the market is now about to break below this level. The market also broke below this level of support, came back to test it as a resistance. Now, the best way to approach this is to obviously wait for the market, give us a clear daily close below this strong level of support. That would then be turned resistance. The market would then go and test the neckline of the W formation on the pullback. We would then wait for the market to pull back to that level, and then start looking for selling opportunities to the downside. Next up, we have got Euro USD. If you remember this analysis and if you've taken it, you should have made some good money. But the market's now back at this level, testing it as a level of support. Now we have this massive impulse. After an impulse, you expect a correction. And we can see the market had not rejected the 61.8 yet. But that's not important. Why? Because the dollar index is about to increase. So we expect the market to dip below the strong level of support. The resistance that is now acting as support, breaking below this would then turn the support into resistance, and then on the retest we can definitely start looking for selling opportunities to the downside. That's all from my side. Thank you for your time, and as always, cheers for ears.